estimate. So when we value stuff, what we always look for, okay, as far as valuation is at least 3 bedrooms and maximum like 2,200 square feet, single story, mainly. Not that you can't do other deals that are 2-story, this and that, but I want to be very like that's our buy box, what we prefer to do, because it's, and most investors that are in the space, not about adding, this is an ADU conversation, this and that, we can have those, but like, that's the stuff that we like. We're like, yeah, listen, we can get a 3-bedroom, 2-bath, 400 square feet. I mean, any investor there, you're all like, that one, I want that one. That one's the ugly house in a nice street, whatever, right? Okay, we have a 3-bedroom, 2-bath, which is great. We don't know anything what the inside looks like. If we took $80 a square foot, where does that put our purchase? Where does that put our rehab look?
120,000.
About 120. This house used to be done for like 65. Wow. Okay, now it is about 120, especially if it needs roof, etc. But the thing about construction, it's nice to have that buffer if you make mistakes, when you make mistakes, by the way, like 10%. So 120, probably a little bit less than that, but let's just say 120. The next thing we'd like to do is look at the street view. Nice thing about Google Maps, you don't have to walk everything or drive everything. All right, so we have power lines here. This is the kind of that neighborhood though. At one point, the city of San Diego was looking to put these underground in like 100 years. So anyway, it's nice to be able to drive streets when you're on Google Street View because you gotta get a feel. This is clearly a residential neighborhood. But like when we value out properties, there's times where we're like, why is that comp sitting? Why didn't it move? And like right across the street is like a some kind of industrial complex, right? When I say risk, that would affect your value clearly because not everyone wants to live across the street from an industrial complex, something like that. This is a very clear 3-bedroom, 2-bath, cookie cutter, I would say, area, right? Type of property you're like, I'd like to flip this house or buy it. Like it's simple. Let's keep it simple. Okay, let's take this down real quick. All right, next thing we'll do, built in 1959, we have 1,600 square foot lot. Now, you guys tell me, we're on this street, when someone says it's 6,700 square foot lot, if it's not usable, it's hard to value it. Meaning it's like, yeah, it's a big lot, but like it's a hill. Does it make sense? If this was a flatter backyard, do you think people would pay more than a hillside backyard? I think so, for sure. Okay, so the nice thing about Redfin started to do is it tells you if there was any permits pulled or anything like that. So all we know is a 6,700 square foot lot, built in 1959, okay. Let me scroll up and look. They'll have permit stuff in here now they started to do. All right, here we go. Zoning stuff, okay, it's a residential neighborhood. But they started to get a little bit more accurate. I don't know if it has AC, but that'll be a factor. It's the hotter part of San Diego. So then we'll pull up the aerial view and then we'll look at the satellite view, all right? I like the street name, it's a good name. I think it's cool. We know we're on kind of a hillside, right? We took a look, so here's like the work of evaluating. Okay, we know we're on a little bit of the hillside. We know that we are aerial. We have this detached that looks like a single car garage. We did walk in, it's a 2-car garage. But do you guys think a single car garage or 2-car garage is more desirable? 2, for sure. Do you think that if it's attached or detached, attached is good, or think attached is going to be a little bit more? But at the same time, we're just gathering data right now. No one's making a decision. We're just saying, okay, do I like this deal or not? What am I looking at? Okay. All right, cool. Let's look at the local market knowledge, or who's doing deals there, or what agent you know over there is doing something. It's really important because they're going to tell you kind of, oh, that one. I know, you know, who's in the space as a realtor? Realtors, yeah, they'll tell you. They're like, oh, that one, oh yeah, that one smelled like dog pee. That's why I didn't sell. Or that one did that. And you're like, oh, how would you know by the photos? You know, there's too many weird things that can happen. The woman next door cooked fish all day and it smelled and no one liked it. Like, I don't know. All right, so let's go further back a year. Okay. All right, now we got to define ARV. Okay. Now, how confident are we in ARV? Brennan, now we don't have a very usable lot. We know that a lot of people like these flatter lots. Brennan comped this out a little higher. Where do we think ARV is? You guys just sing just as much as I am. Where would you price this out? Not as an appraiser, as an investor.
775.
Go 775.
865.
865. You sound like a true agent. There's no wrong answers, by the way. That was wrong. But there's not really wrong answers. Ultimately, it's what somebody's going to pay for it on that area, right? Where do you think this appraises?
What was the price per square foot?
Doesn't matter. you look at the sold comps, it's hard to work out price per square foot because if something doesn't have a lot and someone does, someone has a pool, someone doesn't, someone has AC, someone doesn't, I don't know what to give you. I think it's okay, it's helpful, but it's not how we value. I'm gonna tell you right now, I think it's worth $7.99 to $8.10. That's a range. Let's split the middle and say ARV is 805. If you were to list this as an investor under 8, now if that other one sells, the next 3 months you have a little bit of appreciation that you can work off of. Does that mean it's what it's worth? I don't know. It's about what someone's willing to pay and what you do. Okay, so let's say our ARV, remodel value, this is how you do your math, is 805,000, okay? Choose that math. Would you list it there? I don't know. Would you sell it there? Hopefully. Okay. Rehab. What was our rehab?
120.
120. Okay, so 805. Let's just subtract 120. What is that?
685.
685. By the way, where do you think most agents list this house on the open market?
It's below market
Oh,
value.
700.
They list it right there.
Oh, 8.
Why do you think they do that? Because they don't know where to price it. Because they're like, if it needs 100 grand, then someone's gonna put in 100 grand. And they just drop what they think they need it, and that's where they price it, and that's where they sit. And the purchase price never works. Okay? Okay. There. Let's say, okay, so where do we want to buy this is the question, right?
Below 685.
How far below?
How much do you make?
There you go. So here's an easy way to do this. So usually what we'll do is I'll take ARV, and I'm going to take off 82%. Let's start with an 18%. So there's different risk factors we have in our pricing and all that stuff, but it can really change and vary. But I'll go 82% of ARV. What's that number? So I have 18% of,
144.
okay, so what's 144 minus that?
685. Oh.
What's 144 minus, 805 minus 144, anyone have that?
Oh.
660. 660.
Okay, 660,
805 minus 144.
okay, good. What's our rehab?
120.
So what's that minus rehab? 540.
Mm-hmm.
Okay, so you want to buy this between 500 and 540. Now, let me tell you why. All right, so you have, now let's talk about this. Anybody have, I have a lot of pro formas, I can share that high level, but ultimately I want to do this in real time so you understand how the math works. You can also go the other way. 540 plus 144, or plus my rehab, 130. Now I'm at 670. I think I can sell at 799. Okay, I have holding costs, taxes, insurance, supplemental taxes, right? Real estate fees to sell it. What is really my net profit? What most people don't understand about equity is what equity actually is. Okay? What net equity actually is, it's the net number you make after everything is paid out. You can't buy anything at 685 in profit. We know this. Because you're not going to get 805. You guys saw those finishes in there? You think you can do, you can't, no, you're not putting vinyl plank flooring, all that crap in there for less than what, it just is what it is, okay? So your purchase price, do you want it here? This is what I consider our max offer, okay? Not even like a starting price. If your max is 540, do you come in and start it that way? No. If you don't have to, don't. If you have to get the deal, that's different, and you want to take it on, that's of course, okay? But ultimately, you want to come under your max, okay? Let's do the math now. Okay, so I have, so what is the average price to sell a house? Well, it's not 6%.
It's like
So 805, let's just use 805. It's about, so you'll pay about 4%, okay? Between your selling agent and your buyer's agent.
Closing costs.
Okay, so that if you charge a point plus, let's say you list it for a point, buyer's 2.5%, then you have closing costs, about another half point on that. Okay, so what's that number? 805, let's subtract it down. What's 4% of 805?
32K. So it's 770.
All right, so now I'm at 770. Okay? So if I'm at 660 all in at 770, and I only factored in commissions, not taxes, insurance, mortgage, supplemental taxes, utilities,
Mhm.
mistakes.
Is that how you get to your 18%?
I'm showing you the up way and I'm showing you the down way, okay? Yeah, this is the up way of my high level, back of the napkin math, right? And now I'm showing you the net, what your net equity is. Your equity is the difference between not where you buy it and sold, that's gross equity. If I buy something at 500 and it's sold at $1 million, but I put in 904, and I put in 490,000, I net $10,000, right? That doesn't matter. What it costs to get there doesn't really matter. But is that worth time, energy, money, exhaustion, whatever, right? To get to your goal. I saw you guys before, like, okay, so now we're doing the math. Good. Okay, so we have 4%. Okay, Haley and Ryan, what would taxes be on 805,000? 6 months. So half an annual tax.
1.25 that percentage.
About 1.25?
So 0.6.
$4,200.
About 42. All right, so minus 42. What do you think you get supplemental tax will after it's got reassessed after you bought it?
At 8:00.
Between 80 and 50.
Yeah, probably. There you go. Right on. All of your title stuff, by the way, you guys, those are your people right there. They'll help you get into deals, make sure you're profitable, do all your work. Like 100%. Get their information before they go. Okay, so here, boom. Okay. Insurance. I got insurance on this. I need to get a builder's policy. I need a lender's policy. I need those things. Oh, by the way, I still have closing costs when I buy it. All right, so let's just say that's another 2,500. Utilities. I got electric. I got SDG&E, not cheap right now. For going up another 8% by 2027, which is freaking insane. Water. Let's just say another few thousand. How much? Let's just say that's
1,500.
It's called $4,000.
4,000.
If you, ain't not that much. They don't hold you long. How long you hold it? So you're probably holding about
400 a month.
6 months. Yeah.
2,400.
Let's just say it's about 2,400. Wouldn't be that much. Okay.
What was the 2,500?
Insurance.
Insurance,
Okay.
utilities, supplemental tax. By the way, this stuff no one ever thinks about. Nobody. Not one damn person. They're just like, whoa, you make that. No. You gotta buy, sell it, you gotta pay your fees to do that. Okay, so property tax, supplemental tax. Okay, now I have my holding costs. Okay, how does that, if I'm buying this all cash, which most of you are not, and I'm not saying you don't have it, I'm just saying I would if you don't have to, considering the opportunity cost of that money. But, okay, you're gonna fix and flip loan or whatever. The way these loans work, you're gonna probably pay about 10% interest only. Okay? So if I'm buying at 540, my rehab's 120. Another way to look at this. If I'm buying at 540 and I have my rehab, I hear a lot of sighs. People are like, man, this flipping sucks. I haven't even done a deal yet. Okay, bought at 540 plus my rehab, let's just call it 120. I'm in at 660. You can get a credit line for your construction if you wanted at 120, so I think it's good to do and smart to do. It's good to have a credit line open in case things go up or down. But also, now I have my net difference between, usually what we'll do here is give you, let's call it 85% of that number. 85% of 660. What's that?
561.
So say you can give you your loan could be up to 560 if you borrowed all the money. Let's just say it's $5,000 a month. to hold it. 10%, let's use a high level, so 5,000 a month. Let's say it took you 6 months. Okay? When you buy your, now, who's ever bought a house in here? Right? Your mortgage is always, your first month is always paid out when you buy it. So you're going to have 5,000 out at purchase. Okay? Let's say hold it 6 months. That's a 30K hold, right? So I got 30K. These bills are my hidden taxes that you're not paying attention to. I have my utilities, taxes, insurance, and rehab has to go 100% right. What would be my net profit on this thing? So let's do this. This is where people miss too, by the way. No one factors in their mortgage as it goes into their cost of profit. But how could you not? Especially when it's interest only. Yeah, it's tax deductible, but like, so what? So is everything else. Okay? So this is what happens is a lot of wholesalers get stuff under contract like, hey, you should buy this thing at like 600 with an 805 exit. It's like, dude, how do you make money? Without a ton of money down of your own capital to attempt to profit in a tighter market. So, okay, got 30K. So someone help me do the math real quick. I want all the expenses taken out. So let's avoid purchase price right now. Who cares about that number? I want to know what my net is. I guess we can use it for our net right now. So give me 805, what's this? Minus 30. So
I got the 729, 400.
729.
Mm-hmm.
Okay. Okay, and then and 805 is my number. Okay. Cool. So what's that difference? That's let's call it 80K, 75K profit. So what percent is that? It's like 8%, 9% of ARV? 7.5%? Okay, I want you guys to rate this. Are you confident in the 540 purchase price, 1 to 10? And then down your exit strategy, if you're above 45 or plus, would you do the deal? Do you have a pen? Do we have a pen? Need a pen? This is if it goes right.
Yeah.
That's right. This has to go right in 6 months. Could go right in 4 months, could be take 9 months, could be a year, could be a month, could be 6 months. I don't know, it just depends.
I like 500 better.
Me too. And maybe it wouldn't blow you away, blow us.
Can I ask you about the 4%? That's your top, like.
That's just commission, real estate commissions to sell.
It doesn't the seller, you're the seller, you be the seller, right? Don't you always pay out at least like 6% plus any other closing costs? No?
6% commissions. If you're flipping a house and you're giving that agent a deal, that listing agent, I would no. Especially on like a flip, and it's like you got to really. So could you start there and negotiate down? But if you paid 6%, like it's 2% more.
No, I hear you, but I mean, don't agents just charge you 6%?
No.
Free to them, free to the buyer? No.
No, your typical buyer's commission is about 2.5% starting, and your listing side on typical is like 2%.
Okay.
But like when you're flipping a house and you have I didn't even get into staging and all that crap. You know. When you're flipping a house though, no, you can get agents to say, do it for 1 point. I mean, if they're listing it, maybe 1.5 points, depending on their brokerage, and they'll do it. You know, it's free money. I'm gonna say free money, but like it's marketing for them.
Mm-hmm.
If you're licensed, people are licensed, they do it themselves. If you're doing 1 deal at a time, 1 deal a year, yeah, be a listing agent. But you have to make sure you're over disclosing everything, of course, and there's liability. So you can save maybe a point there. So could people pay this price? Yes, they could. Would you pay the price is the question, right? Okay, so I want to hear it. Who's a 45 plus and would do the deal? And by the way, that's okay. here's how I look at these. What's your opportunity cost? Meaning, what else could you be doing to earn the difference? So if we're gonna make 70, what's the number?
75.
75 grand, okay, divide that by 6. So if you can make, if you're like, dude, if I can make an extra 75,000 a year or 75,000 over 6 months, hell yeah, I would do that deal. And by the way, when you're early in investing, I think it's okay to take the shot, just be cautious and know the numbers, right?
11.5% ROI for 6 months.
Look at it that way. So then you're like, I like that.
Yeah.
Okay. So you're like a yes. That's good. Anybody, where else? Where do you, he's looking at 6 months ROI. He's looking at it differently. I like the perspective. Anybody, what, you don't have to share if you don't want to. But take your notes down. Okay, so the next one. Can I justify my offer based off comps? Hell yeah. Say you're talking to the agent or wholesaler or seller. Hey, look, here's why. So here's my price. Here's why my price is where it is. The most underutilized word in sales is because. So here it is, and here's why. And the way to break that down is you always start with remodel. Here's how you negotiate, okay? I'm gonna give you a quick tip. Here's how you tend to negotiate a good purchase price. Hey, here's where we see this going sold. Here's why. I understand that you think it's going to be worth more. You don't just necessarily say that, but you can be thinking it. Here's why the price, here's where we think it sells, here's why. Okay? And then currently, construction, it just is what it is. I wish we could get it down. I'm on the same page as you. It's still $80 to $100 a square foot, whether I like it or not. That's what the contractor's going to charge us and charge me to do this property. So because of that, and for me to make sure I'm profitable and I feel comfortable buying the house, I need to be at this price. Okay? You start with ARV to rehab, and here's why. If you just say I'm at 540 and have no context, they're gonna be like asshole lowball. Right? Even though there's a ton of context, you just didn't describe it because maybe it wasn't worth your time or whatever, but ultimately, these are the conversations you gotta be willing to have. Okay.
With the listing agent.
What's that?
With the listing agent.
Well,
These are the conversations we have.
whoever can negotiate.
Mm-hmm.
Seller. And by the way, at 540, you're gonna pay another point or so on top of your price with closing costs. You know what I mean? I didn't give, So whenever you give a price, like I want to be all in at this number, maybe you need to be at 530 or 535, knowing you're gonna pay a point and a half. Closing costs, loan costs, whatever. It's just cost to buy a house. Anybody's ever bought a house, sold a house, you know what I'm talking about. All this goes into closing statements, you'll see it. It goes in your P&L, okay? You don't need a fancy pro forma to do basic math, right? Okay, own money on the resale value. Okay? So you guys see yes, no, maybe. Would I do this deal? Can I justify today's comps? Yeah, I think we can justify the number by today's comps. Do I have a realistic budget and timeline? I think we do. Would I bet my own money on the resale value? Well, you are. Right? I think so. Look, in real estate in general, people are worried about, the market's gonna crash, this and that. Like, that doesn't happen in like a weekend, right? Like, it's not a stock, like I'm saying. It's a business that can move and et cetera. And because this price point in this particular part of San Diego, for example, like, not that you're insulated to all risk, but you're insulated to a lot of risk. Because first, like right now, and unfortunately, the median home price in San Diego is $950. So a single family detached house at this price is a good value. That's why that went pending in 13 days. Like, you'll see this pocket appreciate by probably a fair amount, considering there's a lot of rehabs over here. So you'll see like it's a less mature market than like Carlsbad or something like that. It's like you see like values go boom. It's like gonna be kind of weird, but there's gonna be a big discrepancy between fixers and ARV over here. If the market softens, do I have another exit strategy here? Okay, the market softens. Where am I all in?
When will the market soften?
I'm all in at 660. I want to help you guys understand this.
No.
Oh, yeah, I think so.
by the way, yeah, for sure they're softening. But by the way, is that better than leaving it vacant? Of course. But here's the problem. I'll just tell you why. Okay, so I'll erase this so I can go a little higher. I'm on it. I have an 805 ARV, right? We're pretty defined there. If it goes up, great, but I cannot speculate. Okay? Speculation is the death of an investor. Speculating is not investing, it's speculating. All right? I hope, I wish, I think, I might. No, none of that. It is or is not, okay? Back to logic, black or white. Is or is not. Okay, so 660 is my price. Okay, so what's the most you could do as far as a DSCR? Anybody know? So first of all, I have one issue. I have a hard money loan. I'm not going to call it an issue. I'm just going to call it a process of decision making and elimination. I have a hard money loan. These are 12-month loans. These are 12-month loans. Can you extend them? Yes. Are you paying down principal and interest only? No. So you always owe 660. Okay? Purchase plus your rehab. That's where you're at. Especially if you get a credit line. Okay. Most I could do as far as a DSCR. Have you heard the term DSCR?
Yeah.
Debt service coverage ratio. Okay, debt service, whatever. What that means is it's a rental loan. If I have a non-owner occupied, how much could I lease it for? What leverage could I get to refinance my hard money loan? Okay? If it's not leased, if it's not rented, meaning you didn't lease it, the most they'll give you of leverage is about 70%. Not leased. A lot of them want to be at 65%. Because it's risk. It's not a leased property. And I don't even know if I'm covering this. So 70% of let's say an appraised value. Okay, so if you're listed, you can't sell. Is your value 805 anymore? No, it goes down. So if you come into a deal and say, I need to now figure this out, do not put it on the market and attempt to refinance later. It will not work because your value is going to be less. It's not an appraisal. Now the appraiser's like, well, you're the comp. What's it worth? Okay? This is why, like, I see a lot of investors be like, worked with, built out, did blah, 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 whatever. But ultimately, it's because they went on market, they're like, now I'll do this, now I'll do that. This has to happen now. But ultimately, if the leverage is too high, it's very challenging. Okay, so let's just say you didn't put it on the market and you take out 70%. What's 70% of that?
Of 805 or 660?
805.
563.
563. So the lender's going to give you 563, which means you better wire in 97 grand to be able to refinance your loan. You understand? It doesn't mean you're underwater, but it means you need to come in with cash to close, not the opposite. This is why when you come in to flip a house, you stick to the decision. Okay? I've sold houses, cut a check for 50 to sell it. Because I was like, it ain't worth holding. Not worth holding. Cut the check, get the hell out of the house. Sell the damn house. Don't refinance it. I don't want to keep it here. I didn't want to own this for more than 6 months, let alone 5 years. Sell the damn house. Move across ego, right? So it's like, okay, the most you're gonna give me is 70%. I'm in at 660. Your profits can only dissipate every month as you hold it. 5,000 eats into this, eats into that, eats into that, eats into that, eats into that, right? Taxes, insurance, all that is a fixed holding cost. Okay, all that factors into your profit. Okay, so I can't refinance it to a place I want to. All right? If you have it rented and leased, you can get about 75%. We need them in there for 6 months. Okay, so 75%, lender will give you. Now you're still at a negative cash flow. So when you come into flips, this is where people are like, oh, I'll just rent it. It's like, yeah, but you can't. You can't just rent it. This is gonna mature. This doesn't work. Okay, now I'm stuck in this deal. I'm not stuck. I just need to drop my price to sell it. Okay? So if I'm coming in at one price, at 540, I don't have a lot of outs. I got one out. That's the flip it. Okay? You got one out. I'm doing this one thing, which means my finishes are this way. It's not rental grade. It's all the same stuff, right? It's all copycat to the other deal over there. Okay, so now I pressure tested it. What's my other exit strategy if the market softens? I'm selling this bitch no matter what. Excuse my language, but you're selling. Is there enough margin for mistakes? I think there is. There's enough margin for mistakes. Is it the most exciting deal between purchase and ARV and all that stuff after everything's factored in? No. But is there enough? Yeah. The market's not going to drop by $70,000 here. You know what I mean? You could be the mistake. For sure. You can make mistakes. That's okay. That's normal. Just get out of the deal. And that's okay. This helpful? So where do you guys rank this one? Yes, no, maybe. We have someone that would do it. We justify our offer. We have realistic timelines. Would I bet my own money on resale? The market softens, we have an exit strategy. Is there enough margin for a mistake? I think it's an okay flip. Is it the most exciting flip ever? No. But is it a deal? By the way, you know what price they wanted for this thing?
$550.
Dude, we can't even make it up. It's actually the craziest prices ever. The $865. So guess what happened? They're like, we had an appraisal.
Wow.
What appraisal? Zillow? Dude, honestly, we couldn't even make. I was like, holy shit, that's not real. So basically, what you're telling me is most fixtures on the MLS don't sell because of what dang reason? They're overpriced dramatically. Most of the time. So like if you're going on the MLS to find deals, just know what you're up against. So it was really important when we look at, we're sourcing. Let's just talk sourcing for a brief second. This isn't a sourcing meeting or anything, but I think it's helpful. It's 120 days, whatever. And it needs work. I'll show you a quick example of this. There's a couple things happening a couple times. A, the seller's dictating the price, not the agent. The agent doesn't know, usually a combination of both. Oh, it should be worth that. Or the agent bought the listing or something, meaning they're, oh, I'll get you this price. And no one else told me what I wanted to hear but you. But it's a fixer. Fixers don't go price per square foot. They don't go anything. They have their own thing. And this agent, though, who has the listing on a pocket fixer, is a good conversation to have and good connection to have. Because if they come across more fixers, having a conversation with them about what they do with all their other deals, because sometimes they have to list them and there's some probate attorney official that's saying, yeah, you gotta list this at this price, you got this appraisal. It's a waste of time for a lot of people, but it's what the agent had to do. A lot of these agents can come across these deals and if you're ready to go, or they'll do a deal with it. We get a lot of deals. All right, so cool. Let's take a look at what that figure looks like. All right, so we had a bid test. You guys learned something?
Yes.
All right, cool.